OMG, we made it.
Well, hello. Hold
Hello,
on.
how are you?
I'm well. How are you?
Hanging in there, hanging in there. It is the day before Thanksgiving.
Yay.
I
Hold
think
on.
we
I'm
can,
going.
you're
Okay, I'm
fine.
good.
We can probably put that as a topic at the end, as a little segment to finish off what you're thankful for and all that great stuff. But today we had some topics that you brought up, and I thought they were interesting that we could talk about. So it said, I kind of wrote this out. I said, look, the mortgage world shifts like sand dunes in a desert. And I said, constant motion, constant reshaping. But today we're talking about the tectonic stuff. We're talking about the technical stuff. We're talking about
hmm
ECOA and regulations and the forces beneath the surface. When the CFPB sneezes, who are they? The entire industry catches a cold, but when Reg B changes, every loan officer in America relearns the alphabet, and somehow consumers are supposed to magically understand all of this. And really, what is the value of a loan officer? Who should be who should you work with? Is at the end of the day, who should you be working with? So I thought these were interesting topics that we can share on Epic Lunch and Learn episode 60. Now, I want to start off with the audience. I apologize. Yesterday, we were having major technical issues. I don't think YouTube even got a chance to see it. And I think Facebook and obviously LinkedIn saw it. So I do apologize, but I think we're better today already. I was nervous because the weather is cray cray here with 60-mile-per-hour winds and 33 degrees. And I see snow flurries, that nasty four-letter word, and it is time. How are you, Jess?
I'm well. How are you? I'm thankful to have power because our winds aren't at 60, but they're kicking.
They are kicking like karate. I'm doing okay. I mean, it was one of those days where consumers from the outside don't really know all of the stuff that we go through,
hmm
and it's a situation that people do close the day before Thanksgiving.
Yeah.
That's a day, and so we were slotted to have, what was it, 3 deals to close today, and it looks like 2 out of the 3 will make it, and
All right.
one will be rolled over until Tuesday.
Oh, Tuesday's still not bad. At least it's, well, next month.
It's so annoying because we'll do the interest credit, so then
hmm
that way their first payment will still be January 1st,
Right.
because we don't want to incur that 29 days of interest. But it was a one where we have 2 brothers, and the
hmm
one brother is closing in Indianapolis, Indiana. The other
Okay.
brother's here in Chicago. We needed the Indianapolis brother to be a non-occupant co-borrower to qualify. We were kind
Okay.
of late on the gun to even do a what is called a POA, power of attorney.
Yeah.
So we didn't really have the time to kind of put that all together. So we just went ahead
Oh,
and mailed out the package to him. He signed with the notary last night, and then we went ahead and said, "Oh, okay, here we go. We're going to mail it back to Chicago so we can sign today." But in Illinois, we're a litigious state. We have attorneys.
yeah.
So the attorney's like, well, my office is closing at 1 o'clock.
Right. As
We
most small businesses are today.
we cooking, we getting ready for family tomorrow. And this is when my Ebenezer Scrooge comes on, like, I don't care, let's go. We gotta close this. It's a purchase. Let's go.
I was just talking to a borrower we're about to do a purchase for, and we were looking at her purchase contract, and she's like, "Oh, we close on Christmas Eve." I said, "Don't worry, we're gonna change that.
Man.
I'll make it happen before."
I just turned Ebenezer and like, let's go. We gotta close this thing. We gotta make this happen. We can't be goofing around here. And sure enough, they were like, no, they mailed off the package via FedEx. It went from Indianapolis to Memphis, Tennessee. Now that logistics doesn't make sense to me. And then from Memphis, Tennessee, it's got to move its way back up north to Chicago. It's in the truck, right? We got the tracking number. We're all looking at it. It's like, is it out for delivery? Is it there yet? We're playing that
That
game.
package is living a Pixar life right now. I wish I could watch his journey.
Man, that package, and so we had the closing schedule for 10 o'clock, and it's still not there yet. And I'm like, well, how long does it take from Memphis? I think that's like 6 hours. So like if it's at if it left at 6 in the morning, it'll be there by right
Oh,
now.
are you trying to math? Are you trying to be rational?
Math it out. I'm trying to use all my telekinetic powers to get that thing there so we could just get this done for this man so he can
No,
enjoy
I get that.
Thanksgiving in his house. But powers that be have shut me down. No, loan officer, it's not going to be here in time. We're just going to reschedule. But you know how much of an inconvenience that is. Right now, we have to return the wire back. All that.
There's so many people it inconveniences. I so many
Yeah,
people, and like, our borrowers don't know. They have no idea, right? There's so many reasons we work so hard to get things closed on time, not just for them, but for everybody that touches the file.
100%.
Yeah.
Yeah, I mean, it's just it's a lot. We impact so many different industries. One transaction is touching over 10 different industries. We're
Hmm.
impacting and then we're impacting lives. So unable to deliver on time today, but we'll get it done next Tuesday and we'll keep it moving. But that was my morning. That was my morning of the nonsense of going back and forth. But let's talk about the CFPB.
Let's talk about it. I'm glad you were okay with these topics. Your email back was, these are interesting, and I wasn't sure how to take that, but you didn't say no. So we're going with it. Okay, peeps. Um, what's up, Instagram? What's up, YouTube? Where else? Are we streaming anywhere else right now?
LinkedIn, Facebook.
Oh, hey, LinkedIn, Facebook. We'll go back and tag me in those later.
Yeah.
All right, CFPB. So the Consumer Financial Protection Bureau. All right, so there's a whole lot to say about this. I have a ton of notes, but I'm gonna try and dump this down. All right, so what is the CFPB? Let's talk about that. So, the Consumer Financial Protection Bureau is there to ensure that consumers like ourselves, right, when we buy things, are protected in financial markets. So that's mortgages, credit cards, student loans, payday loans, pretty much anything that has to deal with finance. The idea is that business is supposed to be fair, transparent, and competitive. So this agency is not that old. It was established after the aftermath of 2008, right after our financial crisis. Um, for those of you who are a little nerdy, this came along with the Dodd-Frank Act, right? The Consumer Protection Act, and essentially it just consolidates consumer protections. All right, so I'm a big fan of it, especially as someone who works with a lot of credit reports, right? I'm one of those loan officers that doesn't mind fixing credit, right? And giving advice on credit. And the CFPB has been like my greatest protection because they force the credit bureaus to do something when they're lagging behind. So at the beginning of our new presidency, some
Mhm.
things changed with the CFPB, and there were some significant steps taken to dismantle it. And don't worry, I have an argument for both sides this time. So there were some significant steps taken to dismantle it, that included drastic staff cuts, halting investigations, adding new rules, and then a recent court filing tells us that the CFPB is going to run out of money in early 2026, which is by design. So when I say massive reductions in workforce, I'm talking nearly 90%. Um, the director was replaced immediately, and this all happened in the first 100 days. Um, Investigations being halted. Well, that was a huge deal because the CFPB was fighting a lot of lawsuits at the time. So just in 2025, right? It's November. Just in 2025, the CFPB initiated lawsuits against Block Incorporated, which is Cash App, for deceptive practices, Capital One for misrepresenting savings account and interest rates. There is a suit going on with Experian for mishandling credit disputes. Vanderbilt Mortgage and Finance, tons of different violations. Like all of these companies right now are being sued by the CFPB, and it's all in protection of the consumer. Well, now they're trying to not only dismantle it, but also they're trying to change some of the laws.
Yeah,
So it's
yeah.
been very difficult to help people with fixing their credit right now. Um,
So why
and
why
with
was it created? What was the whole goal?
So the idea was for the consumer to have essentially a bodyguard, right? Is someone that could hold the bureaus or other financial institutions accountable, right? Because the consumer is looked at as the little guy, right? So
Sure.
the CFPB was our man on the inside. They were very easy to work with, very easy to submit complaints, and essentially they just made sure everything moved in a timely manner. Because before they came along, things were not moving in a timely manner. To get an answer on a credit dispute in 30 days was very hit or miss. But once the CFPB popped up, it was pretty right on the money.
Right. So
So
there, I mean, you're talking about the new administration wanted to, and this is just ideology based. They wanted to shrink the power of the Consumer Financial Protection Bureau.
100%. Well, what they're trying to do is get rid of it altogether. But what
Mm,
they could only do in this, in this first year was dismantle it to and put someone new in charge, to the point where essentially they're bankrupting the CFPB by design. So the idea is for it to not be there. Now there are these petitions online where you can like fight to save the CFPB. And I know a lot of loan officers are on the fence this about the CFPB. But if we're doing the right things and our concern is for the customer, right? For the borrower, if we are acting as true fiduciaries, CFPB is great. If I can't fix credit, I can't write mortgages.
well, yeah, I mean, obviously,
No?
the three phases: what credit, income, and assets, and so that's a
Right.
major concern. Yeah, it's interesting. I mean, obviously, it's the police. That's what I call it, the police of the industry. The thing about the CFPB that I've always questioned, and this goes with any regulatory, just how much experience do you have in the space that we're in? You how much experience do you have, sitting in my shoes, sitting in my chair, dealing
Mhm.
with the customer, knowing the ins and outs. That's always been kind of a fear factor that I've had that, they want to be advocates, but they don't really understand holistically everything that goes on that takes place. Where really, is the loan officer the bad guy? Am I out there for good or not? So there is a situation where I do feel like there has to be a better opportunity.
Mhm.
Um, going on how
Okay. I thought that maybe he was lagging. Are you lagging a lot?
unusual to consider us fractured right now.
Hmm.
Are you good?
I'm good. I couldn't say something else. I can't tell which one of us is lagging, but my download speeds look amazing. Hmm.
Can you hear me?
I can hear you now.
We did it.
We did it.
We're back.
Okay, I guess we're back. All right.
Yeah, it was kind of weird. I don't know. We're going through a thing. How much I don't know how much you got to hear what I was saying, or
I got the
slim to
gist
none.
of well, I got the gist of it, how you feel as a loan officer about the regulatory agencies and how they're kind of looking at it from up here, right? And they're not necessarily in our
In the
shoes.
trenches.
Yeah, I got that.
And I want
I
more input. I feel like our industry, which is a $1 trillion industry, is
mhm.
fractured from
Oh,
just communication levels of like, well, hey Don, this is back in the day, right? In the 1800s, we had to get,
not
everyone were
the
farmers.
1800s.
I'm taking you back. I'm taking you
All right,
back.
let's go. Let's go.
Where you have the representative, right? Because
Mhm.
there's no internet, there's no communication, there's no TV, so I don't know what's going on. So I'm going to have a representative go to the Capitol and tell you all my issues. To some degree, where is my representative that comes and says, "Hey, what's going on in your industry right now, Dante? In your perspective, what's going on in Chicago? What's going on with the borrowers that you're dealing with? What are some of the issues?" I just don't see that on a regulatory basis.
So, I think one thing that we have to remember is that the CFPB and everything that came post 2008 is only 17 years old. It can't
Sure.
even vote yet, right? Um, and it has been through a flip of parties, right?
Right.
So I totally get what you're saying. I think I've never had that experience with it. But I do know a lot of loan officers who feel the exact same way you do. So I get that. What I don't love, though, is while we're working it out, the way it harms the consumer.
Sure.
Like with what we have going on right now. So, ECOA, the Equal Credit Opportunity Act.
Hmm.
ECOA has a regulation in it, B, for all the other nerds out there. And Regulation B is essentially about discrimination. And they're trying to tear it apart. There's a specific term that we are all tested on in our continuous education called
Hmm.
disparate impact. And they are trying to delete the existing language that suggests that disparate impact is a liability. In its simplest form, they're trying to roll back the version of civil rights in mortgages. So they're trying to change the language to make it more specific, which normally we would think, oh, this is a good thing. But that leaves a strike zone for discrimination open wider and wider, right? We're looking at needing a higher burden of proof, systematic bias, restricted enforcement, narrowing of discouragement. Like,
It
but
makes it easier
it
to
makes,
discriminate.
yes, it makes it so much easier to discriminate based on race, religion, gender, you name it. You can be discriminated on it. It's gonna happen if this rule goes away. Um, I'm not a fan. It's gonna the impact is going to be like it's gonna discourage creditors from pursuing the idea that if they do this, it'll discourage creditors from pursuing like more innovative or cost-cutting policies, um, due to just the uncertainty around the potential impact of what we refer to as protected classes. Personally, I don't want to roll back the clock. Uh-oh. Can you hear me? Did your internet pause again? You're paused on a curious face on my end. Okay, let's see. What does YouTube see?
No.
Oh, you back?
What does YouTube see? I'm back.
All right.
You were
Hey,
gone. I was here.
you were gone. You were frozen on my
I think
side.
we
My
were both
downloads,
gone for a minute.
we must have been. Maybe it's our streaming service because I'm
Yeah,
downloading
yeah.
over 350 megabytes per second. So
Yeah, I'm solid over here, and I had
okay.
any issues. You know what the thing? I got some stats for you because I know you like numbers too.
I like
Uh, a
numbers. Let's
study
do
of
it.
uh, a study of 2023 data showed that borrowers from minority zip codes often paid 0.125 to a half a point higher rates on average, even with similar credit profiles. And then to your point, over 70% of fair lending enforcement actions in the last decade involved disparate impact analysis as part of the evidence. So if you take away disparate impact, then you're really not giving enough proof. These people are not going to have enough proof to really push back and say, hey, I was mistreated, I was mishandled. So that is something to be strongly consider.
Yeah,
um,
it's
and
something
uh,
we need to pay attention to.
but it's hard, so because the noise is other stuff. They don't talk about
There's
the, you know what
so
I mean?
much noise. I believe I brought
Yeah.
this up to you. I think I was heated last week about this.
Negative
And
Nancy, right?
I listen, first of all, calm down. But I was just so annoyed that everybody is talking about the files. I'm not even going to say it.
Sure.
Everybody's all upset about the files. They're rolling back civil rights. What? I don't care about what's in the files right now. Right now,
Right.
I care about the rights that you're losing because you're distracted by that.
Correct. No, distraction is a thing. That the Romans, all the way back to the Romans. I'm taking you back from the 1800s all the way to the
Now we're going back to Romans.
Roman Empire. They
Listen, it
use
is a good
man,
play.
they
It's a good play.
use sports as distraction. So it makes sense that even that's a play that's still going to be used today. That a lot
100%.
of things are out here distracting you. You have to focus on what's important. And what's important is if your rights are being taken away and you can't prove injustice, that's an issue. And that's an issue for a lot of people. But people do have to accept responsibility, right? I mean, I was talking to a guy today.
Hmm.
I called him this morning to check in on him. And he has an investment property. He's renting currently, but he has an investment property.
Okay.
And he basically is like, Mom, I need my mom. My mom's going to handle my investment property. I'm not really going to deal with it. She's going to deal with everything. And to the point of he didn't know what was going on with his investment property. He had no clue. Like
Oh,
it
well.
was being renovated. Is it done? Is it not done? And we're talking about taking cash out on the deal. And I'm listening to him. He's like, man, I'm so busy. I'm just so busy with work and I'm tired. And I just let my mom handle that. And I'm like, man, I don't know if my name's on something. I'm just gonna be so lackadaisical and not really, grab the bull by its horns. I mean, you have to accept responsibility for your item, especially if it's got your name on it. You're gonna have to spread your wings. I don't know, go to bed early. Drink some energy drink or Monster or whatever. But I think you gotta find a way. I was looking at them like, man, you gotta find a way to make this happen, man.
For
Why
sure.
are we relying on mom? What are your thoughts about that?
My thoughts are
Is
I am tired of hearing
she
people say
frozen?
they are tired.
She might be.
Oh, no,
Okay.
I'm not
Well,
frozen. I'm
yeah,
talking to
it's
you.
it's
I'm right
it's
here.
it's definitely a thing. I just asked you what you thought, and you
I was
just
saying
like
words, but then you were
DEFCON
like, "Oh,
5. I
she's
thought it was
frozen."
over.
Oh no, now
You're
you're
moving slow
frozen.
right now.
You're moving slow.
I don't know. We are having some slight technical difficulties. Do apologize, but yeah, I don't think it's. I think it might be the streaming network. They're gonna have to get their act together because I said coming 26, I think we're gonna make a move. We're gonna make the move. They're gonna force me
I
to make the move.
Yeah.
People need to hear
I
me.
also
I keep
realized I was
blotch
talking to myself
and all
on
this
Instagram.
jazz. So the value of loan officers and brokers. Did you want to talk about that?
Yeah, let's talk about that. That's wildly important. And now
I
we are
see her
both showing
eyes
on
moving.
Instagram because I was just streaming myself apparently.
We're both there.
Yeah, we're both on now. Yay. Okay. Um, let's talk about the importance of a loan
Are we on
officer.
Facebook? I know we're
Uh,
on Facebook. I see Vince.
I'm not streaming live on Facebook, but I am streaming live on Instagram.
Are we live?
Yeah,
We're not live on Instagram, are we?
we
Oh, you
are.
hooked that up.
Yeah, you're there too. Don't worry.
Okay. Are we on YouTube?
Yeah, we're on YouTube. I can see the lag now. Yeah, it's the service. It's not us. Okay, you're back because I
You
hear your
there?
phone buzzing.
My phone is buzzing. People are calling. I try to tell everybody I got the show at this time, but some people still don't know yet, so I just let them be.
Oh, mine are on D&D
Is it
because
better
nobody
now?
cares when I'm busy. Yeah, I feel like we're good
I
now.
feel like
Okay,
I'm 5 seconds ahead of you.
rough. Yeah, there's definitely a delay.
Yeah, we're rebooting.
So let's
But yeah,
talk
no,
about.
it's interesting. So obviously, that's what he said on Facebook. We had a lot of people jump on right away and had a lot of comments. Are you with me now?
Love it. I am. Are
Okay,
you
because
reading?
I felt like I was 5 seconds ahead of you.
I think you are definitely at least a second and a half ahead.
That's that super internet speed I got over here, and you got that bootleg Detroit style. You see
Listen,
how?
I'm running over 350 megabytes per second. Okay, calm.
I don't even
And
know
I'm
what that
hardwired.
means, but I'll just take your word for
It means it's real fast. Okay, it's the Ricky Bobby of internet.
it. Ricky Bobby. Nah, I like that. I know Ricky Bobby.
Yeah.
You
All
hit
right.
me with some Ken Griffin. I was like, who is that? Like, what is that? Do I
All
even
right.
know
So
who that is?
we're going to just acknowledge that there's some kind of delay, and we'll work with it.
We're gonna work with it.
Perfect. See, that was about a second and a half. All right, let's talk about loan officers before we lose it again.
Loan officers, it's we've talked about this a little bit, and I wanted to kind of, keep going with this idea of like your hair, your nails, your doctor, your dentist. I mean, you don't want 3,000 people all up in your teeth. You don't want 5 different hairstylists.
Right.
I feel like a loan officer, developing that relationship with a loan officer is a must. It's something that you should do and want to do because I don't want my social security number, spread. It's already on the dark web. I don't need it
Hmm.
anywhere else.
That's right. CFPB is trying to sue Experian for that. Full
So
circle.
yeah, full circle. That's a good one.
Yeah.
So it's one of those things where I'm really encouraging people like, hey, if you develop a good relationship with a person, then you should really try to, develop that relationship, and hopefully they have the same ideology and they can help you out, along the way, along your journey. It's not something that you should, potentially, hop and jump ship. There's,
Right.
I think consumers, too many times we always talk about transactional and relationships, two different things. I think consumers think this is transactional, but I covet that relationship, that, hey, I enjoy working with the same people over and over again. I can develop more of a relationship. I know what they're thinking, their family, and we can have good conversations. I have a customer right now. And I took a look just, and I was like, I've done a couple deals for them, but we're working on three. We just closed on one. We have two more deals working on, and I've done 4 deals with the same family, and it
Okay.
becomes comfortable conversations. We're laughing, we're joking, we have inside jokes now. We're talking about this, and so we really get to know each other. And the funny part is, I've never even met them in person.
But you know what? That's how it should be. Like technology has afforded us an opportunity like this, right? Where we can form bonds and trust and not ever have to meet anybody in person. It'd be cool if you did, but it's really cool that you don't have to, right? It really opens up your world.
100%. I mean, even you and I have never met in
Right.
person.
Yeah. We've never
But
met you. We were talking yesterday and you were like, tell me more. And I'm like, oh, yeah, because you don't see my life every day.
no, I do not. No, I do not.
And
Yeah, no,
it's weird now when we don't talk every day.
it is.
Like, but yeah, we're not. You're in Chicago. I'm in Detroit,
Yeah, that's
but
8 hours away.
it's 4.
4?
4. It takes us
Really?
4. Yeah, really.
Oh, I did not know that. On a
Yep.
train?
4.5 on the train, 4 in the car.
I did not know that. I thought it was further away on the drive.
Oh yeah, no, you're not. You're like a hop, skip, and a jump.
Got it. I know I'm an hour on a plane because I've been there.
Yeah, yeah.
I've been I've been there. Been there. I walked the streets of Detroit. So that was interesting. But yeah, no, I just feel like we need to develop relationships with our loan officers. I encourage customers out there to develop relationships with who you're working with. That way you're not pulling your credit with 3,000 people. I and the thing is, another thing that I'm starting to wrap my head around is when I first got going, I really started going back in time. When I first got going, I didn't know what I was doing. And right now we have a mutual person that you're familiar with, Ben Johnson. And
Hmm.
Ben Johnson was the offensive coordinator for the Detroit Lions, and now he's the head coach for the Chicago Bears. And he has this thing after we win. We've won 4 games in a row. Right now, we're on a hot streak, and he always talks about good, better, best.
Never let it rest
Never let it rest.
until your
So
good is better and your better is best.
there you go. There you go. You've heard that before.
Oh yeah.
It was funny when I Googled a good, better, best. They talked about way back when some philosopher came up with that, and then they said, then the phrase was coined by Tim Duncan. They said
Oh my boy,
so.
the
Full
big
circle.
fundamental.
Full circle from our podcast. You told me favorite player was Tim Duncan. Blew my mind. I was ready for all these Piston people, and I'm like, Tim Duncan, and
You
there you
were
were.
our podcast episode. Your face did something. You
I
were
was
genuinely surprised.
100%. I'm like, wait, the guy that beat you in the finals? Like, you're fans of that guy?
Grant Hill, if you're watching, you still my favorite player.
There
But
you go.
yeah, Tim
There you
Duncan,
go.
man, he's the man.
Timmy D. Timmy D was
Um,
all business.
he was all about the fundamentals, and my philosophy is practice the fundamentals, and I think that's a big part of working with a loan officer consistently, building that relationship, right? Um, because any professional, right? I don't care what profession you're in. We all get a little too big for our britches at some point, right? And we
Sure.
forget about the fundamentals. So it's something that I like to constantly remind myself of. But, working with a good loan officer is arguably one of the most critical factors for home buying, second only to actually choosing the right home for yourself. A good LO does way more than just secure a rate, right? We're a financial guide. Um, Communication is huge, right? Your LO should be the communication hub, essentially, that saves everybody time, saves everybody money. We have to be efficient. Um, we should be saving people a significant amount of stress.
Correct.
We are the quarterbacks of the deal, and sometimes we'll throw the ball and then we run downfield and catch it ourselves.
Facts.
You know, like that happens way more often than I like, but I catch them. You catch
Awesome.
them, you know?
Definitely. I got some comments on that, but let's take care of housekeeping notes. We're at that, went a little bit over. So, this episode today is sponsored by Epic Mortgage. Whether you're buying, investing, or refinancing, call Epic today, 708-905-5300. And just give your information.
Okay, so as every week, I am going to stick a link in the chat. But if you are looking for me on Instagram, you can find me at jford_consulting. If you want the phone number, text me, call me with questions, 313-673-6108. But I am going to put my link in the chat so you guys can find all things Just Forward. Whether you want to email me a question, talk about credit, take 12 minutes to watch that TED Talk, whatever you want.
That TED Talk was good information. Awesome sauce. Now, whether you're on Facebook or if you're on LinkedIn, we want you to go to the YouTube channel, Epic Spotlight. Check us out on Epic Spotlight. Have tons of over 400 videos from breaking down credit, breaking down income, breaking down assets for you. So definitely check out all the videos that we have for you. But definitely, I want you to check out the most recent Epic Spotlight interview. It was with Zach Armstrong. Zach is a retired Navy commander, former fighter pilot, and a founder of Empowerment Fitness. In this episode of the Epic Mortgage Spotlight, Zach shares his extraordinary journey from elite military service to building a transformative coaching business that empowers professionals to become their best selves. So check out the most recent podcast with Zach Armstrong. Okay. Now, Jess put something in the chat. I'm going to put something in the chat. I'm going to put DanteRoyster.com. That is the website you can go to check out preferred listings that we have. All right. So we have preferred listings. These are listings that we are working. We know the listing agent. We can help you get pre-approved and possibly, possibly your offer will get accepted over someone else because they know, hey, this deal is really going to close because I got a golden pre-approval from Epic Mortgage. So I'm just going to name a couple recent ones just so if you want to know anyone that's looking to buy, let us know. We do have 12707 Simbay Court in Jacksonville, Florida. It's a 4-bed, 3-bath. Contact Sharday Nix, 904-520-8041. We also have 8442 East Kingston Avenue. It's a 4-bed, 2-bath. Going for $280. Contact Evelyn Wood, 773-718-9742. And then we do have we have 5533 South Menard, Chicago, Illinois. It's a 3-bed, 2-bath. Going for $369,980. Sebastian Kupiak is the one to contact, 773-430-8988. And then a recent one that we just got is 8153 South Champlain, Chicago. It's a 4-bed, 3-bath, going for $399,999. Contact Jennifer Simmons, 773-494-9476. But we have tons of listings for you to take a look at. And so make sure you go to www.DanteRoyster.com. You can take a look at our preferred listings. So today we've talked about the CFPB. We've talked about disparate impact and, potentially rights going away from consumers. We need to be paying attention to some of the changes with ECOA, Equal Credit Opportunity Act, which is also scary. And we've been in this conversation right now, really talking about the value of loan officers. And I wrote down some stats because I think it's important for people to know. And most importantly, I'm going to be biased because I'm an independent mortgage broker. Mm-hmm. And so I did some stats based upon that. They said brokers typically have access to 10 to 50 lenders compared to with a bank loan officer who only offers one set of loan products. And I think that's huge. I think that's different. That means we have niches. We have unique capability and unique items that can really, promote helping you. For example, most big box banks don't offer renovation products. We do. We can offer investment renovation. We can offer VA renovation. We can offer FHA renovation. We can offer conventional renovation. So we can do it from the primary side as well as the investment side. That really makes us unique and stand out in this marketplace. Another thing that they may not do is DSCR programs, right? There's a huge tons of route right now on a DSCR. For example, I got a client right now buying in Florida, and she was explaining her situation and the structure and everything that makes sense. It's an investment property. She's actually going to be moving in her parents. They're
Okay.
older and they're going to be moving into the house. So she's going to buy a house for them because, they just can't afford it on their income. But she can, and she's going to put the money down, and it just makes it easier to do a DSCR, less paperwork, so we can move forward. And so these things are occurring. And once again, Jess, what I love about that is I helped her buy her house, and now I'm helping her buy the investment. So the relationship that you have with the loan officer, if you're working with the right one, it should be a no-brainer that you're going to work with them again. I would be okay if I was introduced to you and you're like, but I love my loan. Stick with them. Stick with him or her.
Right. If you've
It's
built
okay.
that foundation, yeah.
Yes.
I
He
always
knows.
say
Yeah.
I want to be your loan officer for life. Like I want to be your
Facts.
mortgage consultant for life. I'm pretty sure I've said it here, but it's something I say to all of my borrowers and I tell them why. Like this is where we come up with strategy and we work towards your goals together, you know?
Exactly.
And I love that you brought up how many different options we have as mortgage brokers. That's one of the things I explain to people all the time. If you go to ABC Bank, you're going to get their products and that's
Correct.
all you get, you know? But working with a mortgage broker, you get however many lenders we're signed up with. So Epic, we are signed up, I think I counted yesterday, we're signed up with like 40 lenders right now, which means we have oh, the our toolbox is crazy.
It's crazy.
40 lenders and all of their products. And what I think I love the most is when people say, what's your rate? Okay, well, we know they don't know, but that's when I get to explain how rates work. And the example I use is think of your favorite brand of bread. It is a different price at store A than it is at store B and store C. Everybody gets the same bread, but it's all priced differently. Same with rates. We all get the same rates,
Right.
right? But every lender prices them differently. So instead of being stuck with one price because I'm at a bank, right? Because I'm a broker, I get to play with 40 different pricing sheets throughout the day. So it's a huge
Cumbersome in
advantage.
nature.
Yeah, very cumbersome, but a huge advantage to the consumer.
Correct. I mean, digital HELOC is something else that we offer and feature. That's a huge thing. Yeah, if you're looking for cash out in 7 days, that's possible.
Yeah,
That's possible now.
we're closing HELOCs in 5 to 7 days. You never have to leave your home. You don't have to go anywhere. You don't have to worry about scheduling an appointment to go to a title company and taking time off of work. 10 minutes with an online notary.
Yeah, it's awesome. No, we definitely have some great products, and people need to know that. Another thing was a study in 2024 showed that mortgage brokers save borrowers an average of 0.375. That's 3/8 of a point in rate compared to retail banks. So the myth that, hey, it's a mortgage broker, they probably just deal with 580 credit scores. That's not true.
No.
That's not accurate. So you do have to be mindful of that as well. That we can, we've expanded our portfolio to work with everyone. The gentleman that I talked about, the two brothers earlier in the show. Well, one of them's a 580 score. So we can work with 580 credit scores for FHA. We can work with 550 credit scores, but we can also work with the A15s of the world.
Right.
There's plenty of 740s, 720s, 800 credit scores. I can have the same conversation with them. I mean, last night, I was having a conversation with a husband and wife that are looking to buy a $1.6 million house. So I
Mhm.
can put that jumbo hat on,
Oh,
so I
yeah.
can wear different hats. So, you have to know that we have the capability of working with anyone, so really, we're going to leave no family left behind. That's always been kind of my, personal goal. I don't want to leave any family behind. If you want the help, I'm here for you. It was funny. The customer got a call from the listing agent. A deal was going sideways. Buyer was thinking about backing out, so she was looking for other options because she was disappointed with her current loan officer. So he called me and, hey, talk to her, see if you can help her out. And so I said, hey, it's Saturday. It was a non-QM product that, I just didn't really have the capability of pricing out on Saturday. So I had to wait until Monday. And I got back to her and gave her all the information. And she's like, well, I actually was looking at somebody else and you guys are kind of right the same. I'm just going to go with him. And I said, hey, best of luck to you. Have a great day. Yeah. And she kind of there was a hesitancy like, oh, you're not going to grovel for my business, or you're not going to, no, hey, I'm, there's enough people out there that need my help and want my services. If you don't see the benefit, there's more than just the interest rate. It's dealing with the person too. I'm here for the long haul. I'm going to be here. I have, not only do I have resources, capabilities, I have a system in place. I can help you, just like yesterday I called one of my clients and showed her, hey, what would happen of taking, we talked about rate and term situations. She has 300 and it's been, so she has about 341 months left to go on her mortgage.
Okay.
And I showed her, based on her income and situation, I showed her the ability to take the 341 to 240 and how much, overall interest that she'd be saving, over 100 payments of principal and interest, and she can afford it. And she said, man, you sound like my dad. My dad would have done this. And, that's a feel good, like.
Right. It's a compliment for sure.
I'm thinking just like, and her dad's an accountant. And
even better.
So it's like, man, he's thinking like my daddy.
Yeah, even better.
But I am doing that for my clients. Not to say the other person isn't, but hey, if you choose not to work with me, that's your loss. That's what you're leaving on the table, not me.
You're absolutely right. And I have those conversations, especially when I get somebody secondhand, right? And I go, well, we'll talk, right? And I'm positive. I encourage people to shop because I know that even if they shop, they're going to come back to me. It's just like a boomerang because of the way, I treat my borrowers, the way I treat my clients, our process. And I think one of my green flags is almost oversharing, not to a point where it's overwhelming, but I make sure I bring up the things that other loan officers don't bring up necessarily because they think, oh, it'll be too much. No, this is something they need to know. I'll even give them a set of questions to ask. That is one of my favorite things to do.
FAQ.
Yep. Hey, you're not working with me? Cool. Grab a pen and paper. I'm gonna give you a few questions to ask anybody you work with, next 2 loan officers you call. If you have any questions about their answers, give me a call back. And they always call me back to write the loan.
There you go.
Yeah.
No, it's just one of those things. And then it also said borrowers who receive guidance from a licensed loan officer are 40% more likely to close their transactions successfully than those who start online only.
You know what? Even knowing all I know about mortgages, right? 16 years of mortgages, underwriting experience, processing experience. I would not do a mortgage online personally, like all online. Call me old school. I need a human.
It's would you cut your own grass or do you hire, a lawn service to do it? It's kind of that mindset. Like you have the ability to cut your own grass, but sometimes if you want the edges a certain way or you like those crisscross lines
completely straight,
hey, you're gonna call somebody else because you don't know what you're doing.
Yep.
So it's just one of those things. We are experts in mortgages. That's all we do. People will call up, hey, can you help me finance a car? Or can you help me get a personal loan? No, I don't do that. This is what I do. I try to maximize the benefits for my clients, whether it's a term, cash out, and the more I get to know you and the more I feel comfortable with you and the more that you can share with me, I mean, because sometimes, when we first meet, you don't know me. So, right, it's all close to the vest. I'm not gonna need to know basis. I'm on a need to know basis. And I understand that and I get it. And then over time, if I can win you over, then it's like, all right, let's go to the next level. Let's do that next deal. Let's plan for that next deal. Let's not just plan for this deal. Let's plan for that next deal, because that's the deal that's just so important. So, I thought that was interesting. And so those are my little stats of the day. Stats for the show. We got some questions here.
Oh, do we? I didn't see them on Instagram, on YouTube, but let's go for it. I love this part.
All right, we got Jason that asks, how will these CFPB changes impact borrowers with low credit scores?
Ooh, so that's something that I am personally worried about, Jason, because it's opening up the box for all types of discrimination. And so lower credit scores, right? Those client profiles. Okay, so the CFPB doesn't control qualifying credit scores, but they are our defense against the entities that do control the qualifying credit scores. So not having the CFPB around to help protect us, that could put a lot of people out of the market. We don't know how it's going to necessarily impact it. We do know that Fannie, right, with the taking away the minimum score, that's something that's going to wrap into there too.
Yeah, I mean, I don't know necessarily about lower credit scores, but it's just, we all need to be regulated. The reality, we all need to be policed, monitored on doing the right thing. I feel confident that Jess is going to do the right thing for her clients. I'm always going to do the right thing for my clients, but I can't say that across the board with our whole industry. There are situations, especially around the holidays, where, you have to make decisions, and sometimes people gray those lines, and that's where regulation is necessary and needed. I like I said earlier, wish that we had more input and more, communication at the, in the trenches as we are dealing directly with consumers. But overall, we just hope that there is, it can really mess some people up. And then obviously, what is it? One spoiled apple ruins a bunch, or whatever.
Yeah, that's pretty much it.
Thank you.
Yeah.
All right, next one here. Paula writes, can you explain how Reg B removal of disparate impact affects approvals?
Yeah, so disparate impact protects certain classes of people, right? So we are talking about unintentional discrimination, right, against people with, okay, so an example of disparate impact, right? Race, religion, gender, right? Marital status, right? So let's take Paula, let's take women, for example. For a very long time, women could be denied mortgages if they were still in their childbearing years. And this is after women's suffrage. This is after, okay, you can go ahead and get a mortgage without being married. But you might maybe have a kid one day, and that's going to be an extra expense. So no, you can't have a mortgage. That is we were a protected class. So it's stuff like age, right? Right now, we have the rules that an 80-year-old person can take out a 30-year mortgage. We get rid of disparate impact, that may not be possible. 30-year mortgages offer the lower payments, right? Instead of a 10-year or 15-year. So when you have someone that's a little older and on a fixed income, that may be the route to go for them, right? If they are not, they weren't from a wealthy family.
Sure.
That's how they're going to be able to live out their years instead of having to be put in some kind of facility or go live with family. If they can qualify for a 30-year mortgage with a lower payment, then go for it. But that may, because of their age, they may now be discriminated against.
Yeah, I mean, obviously from a lender perspective, even like a realtor, not accepting an FHA loan in a certain area. If we don't have rules and regulation, if things are, and we can't, well, how do we prove it? You know what I mean? So those are things that are definitely something we have to be concerned with.
Yeah.
James, right? What's the biggest misconception consumers have about the CFPB?
Honestly, I don't think consumers know much about the CFPB at all. Um, Everyone I bring it up to is they're like, oh, I didn't know that was a thing.
Sure.
Um, I think of the CFPB. Okay, I'm going to use a word, and this is a great example. I think of the CFPB like a city's ombudsman. I'm guessing a lot of you are thinking, what is an ombudsman,
I
right?
had no idea. I didn't even know that
Okay,
was a word.
right. And at my big age, I did not know either until about a year ago. So every city has an ombudsman, and essentially, when your city services, right, are not doing the right things, let's say trash pickup, right? Let's say they're not picking up the trash, they're not doing what they're supposed to do. You've called them, you've complained, nothing is happening. You call your ombudsman, and your ombudsman holds them accountable. That's
Mm,
essentially the way I look at the CFPB. The CFPB is holding the bureaus and creditors and all these financial institutions accountable to making sure that they're listening to us and helping us take care of our, whether they be complaints or disputes, whatever, it gets them going. But yeah, I don't really think that a lot of people know about the CFPB, um, which is why I wanted to talk about it, because it's so very important. It is their, like, it is the public's silent vigilante. They don't even know it.
yeah. No, and that's why I thought the topic was interesting, not in a bad way. See how we're circling a lot of things back. We're correlating.
We are.
Yeah. So,
Oh, I love
a-
this question. This is for
yeah.
you.
Do mortgage brokers really offer better rates than retail lenders? Yeah, yeah. I mean, the stats show. The stats show. I think we just have more flexibility, than a
Hmm.
retail. Retail kind of gives the loan officer, the retail loan officer, hey, these are the rates for the day, and obviously the flexibility that we have with the numerous amount of lenders that we work with gives us a little variety. I've always attributed mortgage rates like gas prices, right? You're driving down the street and you see, several gas stations and they all have different prices, and so we're having that ability to kind of look down the street for you before you start driving and say, hey, go to this gas station. There's a radio station, 780 AM, and they always people will call in and be like, yeah, the best price is here. You can get gas for $2.75. And they tell people that to try
Yeah.
to save the money. So yeah, no, I definitely mortgage brokers do offer better rates on average. Not all.
There's
I mean,
also,
yeah.
like, okay, so Adam, think of it like this, right? So Dante is my mortgage broker, right? I'm in one city, he's in another, which means we're not sitting in some office together that he has to pay rent on, that he has to pay bills on. So mortgage brokers typically have a lot less overhead. Your lenders, right? Your lenders or your retail banks, they have overhead. They have employees, the W-2, they have buildings to pay rent on. If you're one of the big guys in Detroit, you're paying for parties. Like, consumers are paying for that stuff with their interest rates. They just don't know it.
Right.
So we don't have all that overhead. So it allows us to save you money.
Awesome way to put it. More than loans, it's an epic connection. Thanks, Vince. Happy
Nice.
Thanksgiving to you and your family.
Hey,
Uh,
Vince.
yeah, appreciate you listening on Facebook. And yeah, we haven't had an epic connection today, but it has gotten better over the last 30 minutes.
It has, yeah, no, I'm glad it worked itself out.
Yes. A venture show. How can borrowers know if their broker is giving unbiased advice? Hmm. How can borrowers know if they're? You could chat GPT it. You could Gemini it. You
You
can
could.
Google it. But I mean,
Um,
I like what you said. I mean, you said you encourage people to shop around, you
yeah,
know, to talk to others, and then you can kind of, similar to like a contractor, right? A contractor, you try to get 3 different proposals, and kind of see and hear different insights, and say, you choose one.
right.
And I'm comfortable in that setting as well. If that's what it needs to be, you can interview me with 2 other people, and let the chips fall where they may.
Yep, that's the way like, and I'll tell them, hey, just go ahead, bring me back whatever questions you have. That's fine.
Yeah.
Well, we can compare answers. That's cool. One thing about me personally is I like to cite my work. I
Mm.
take it back to school. Like I will show you the guidelines. When people say, like, I'm working with a borrower right now, and she is awesome, right? She's being run through the ringer though, because people are telling her things that I am finding to not be true. And I say, when I tell her, go ask for this, tell them you want to see a screenshot of it.
Hmm.
It's not happening. Like AUS findings, they can't show them because they didn't run them.
Oh, wow.
Yeah.
Well, there you go. So you have that answer there. Those were the questions of the day. Thanks for everyone chiming in. As we wrap this up, Jess, we're back, circling back again. What are you doing tomorrow?
What am I doing tomorrow? Well,
It is
I'm
things.
studying, a lot of studying still. I'm down to the wire, but I think I'm making dinner for the first time.
Is that scary? Are we going to burn
Uh,
food, or what are we going to do?
I'm not gonna burn food. No.
Okay.
Um, no, actually it's not. I think the scary part is that I'm not scared.
Okay.
Yeah. I feel like maybe I'm a little overconfident about this.
You got this.
But I got it. It's gonna be great. It'll be fine. And if it's not, my cousins are definitely gonna tell me. So,
Facts.
you know,
Like what is this?
yeah, they have no problems being honest, which I love it.
You
Um,
could cater it in. There is such a
so I
thing.
could, and one of my very best friends owns a restaurant here, and she caters Thanksgiving dinners. Um, but I've never made a full Thanksgiving meal, and I would love to at least do it once.
Okay.
I live a very single serving lifestyle. It's usually just me, right? Not in a selfish way, but my life is like a K cup. I don't need a whole pot of coffee. It's just me. So um it'll be fun to do it once, especially I'm doing it with under the supervision of my favorite aunt. So that's the fun part for me.
Are we starting first thing in the morning, 5 o'clock, or are we
We are
waiting?
starting first thing in the morning. So actually, I called her just before the show. I said, "What time are we gonna start cooking tomorrow?" She goes, "Whenever I get up. Don't ask me what time that is." I said, "Okay, so I'm probably just gonna come spend the night tonight, and I'll study from your house.
What did Vince say?
Burn them
Burn
like
them
Vince.
lines.
Don't you have a loan to write or something? Get out of here."
That is funny. All right. Well, hey, happy Thanksgiving to you and your family. Appreciate you. We'll be back next week with what did you call this? Wednesdays with what did you
Oh,
call these?
oh yeah, I coined it. Oh, I don't remember. It's like Ford's focus financial. I don't remember.
Yeah, we're gonna
I didn't
stay
know if
away
we were
from
gonna
that.
use it or not,
Ford
but
Focus. There we go. Ford's Focus
it
on
was
Wednesday.
it was something like that. It
Okay.
was
Well,
to that effect
if you
for
remember, hey,
sure.
appreciate the audience. I mean, you guys pumped it up really right when we got going. Got up to about 460 people were listening to us. Still 400 people are listening to us now. Appreciate that. If you liked some of the conversation that was had, make sure you put that like on there so we can come back to this topic, just learning about the CFPB, Regulation B. It doesn't always have to be boring. It's good information to know, because it protects you and just what's going on in our world. So everybody have a great, happy Thanksgiving to everyone and their family. I do have a new podcast that's going to be coming out tomorrow. So make sure if you have time, wherever you download a podcast, check that one out. And then on Friday, I did a monologue about Black Friday. So
Hey,
so check that one out because I think it's very important. I don't want to I don't want to give anything away on it, but I put some time in. So hopefully you guys enjoyed that on Friday. And then, I'm going to be watching the Bears on Friday. So, I'm super excited to have some Bear football on Friday. So super cool.
It was Wednesday Wisdom. That's what it was. Wednesday Wisdom with Jess
I
Ford.
like that. Wednesday Wisdom with Jess Ford.
I like
we
it.
did it again. Appreciate you. I'll see you next week. Same time, same bad station. And once again, happy Thanksgiving.
Happy gobble gobble.
Gobble. Bye.